Not all great trades are big breakouts or big breakdowns. Some of the most consistent profits come from trading support and resistance channels. So if you want steady profits, learn to trade and identify the bounce and breaks between the support and resistance channels with exact channel trading. Now, what is it? We're looking for range-bound action. We're looking for indecision at the end of the day. Like, we want a stock that has kind of gone to sleep, as I say, and then we're going to identify when it wakes back up, okay? So I'm gonna talk about a couple different concepts here. The number one is just technical support and resistance, so S&R. Now, there's a couple different ways to learn technical analysis. I've got a bunch of videos here. There's a bunch of great books out there, and you're really just looking for basically areas where the stock tends to pull back and bounce, and where the stock tends to spike and pull back. And using those areas of bounce and which is support and resistance. When the stock spikes and it just butts and it can't break, that's your resistance. Now, you can do all of this manually. What I would recommend, and it takes time. Like, I remember studying technical analysis, I'd see people put in lines on charts and I'd really kind of struggle with it. Until I read a bunch of books and did a bunch of it myself. Like one thing great about technical analysis is I think you can really learn by doing. So something I suggest is just like, whether you're trading the stock or not, like, start dropping lines, like where you think support is and where you think resistance is. And you might be completely clueless and trying to figure it out. Do that early in the day, and then review that chart at the end of the day. Were you right? Were you wrong? What can you learn from that? Now, I think it truly is something that when it comes to learning it, you learn by doing, and you'll gradually kind of get better at it. You'll identify these zones, and it will make you a better trader, and it gives you entries, exits, stop losses, and goals. Now, one thing I'm going to suggest doing is definitely checking out our Oracle algorithm, which is included in the Daily Income Trader system. Now, the reason I recommend that is I built the algorithm to do support and resistance for you on multiple time frames. Now, the one thing I do want to jump back on, if you're only doing technical analysis intraday, so the current day, you're probably going to screw it up. No offense. The right way to do technical support and resistance is on multiple time frames. So I use the 2-day 5-minute, the 2-month 15-minute, and the 1 year 1 day. We don't typically go back much further than a year in short-term trading. If you're investing, like you're looking to hold for years or decades, you can look at the 5, 10, 20. But when it comes to day trading and short-term swing trading, those are the 3 time frames I recommend. So make sure you're matching up. You start with the intraday, the current day, then you jump over to the 2-month, and then you match that up with the daily. If you're only doing it on one time frame, you're not going to have true support and resistance. Now, as I mentioned, you do it manually. Everyone should have a basic working knowledge. But what's great about the Oracle algorithm, yes, it gives entry, exit signals, okay? So the Oracle algorithm tells you what stock to buy and when, but a kind of a thing that I don't often talk about, which I should do more of, is it does support and resistance both to the upside as well as the downside. Now, why do I say that? You can use it for going long as well as short. So you can use these channels and these levels to identify zones on the chart and entries, and then stop losses as well. And then you can use the upper levels for profit targets. So every day, 4 a.m., Oracle, the algorithm's running through the night, but as soon as the market opens, it calculates all of the support and resistance levels. So you're going to have a chart that kind of looks like, you'll have different colors. So I'll mix this up a little bit here. I'll add a couple more lines just for illustration's sake. Now, the cool thing, I'm limited on my Sharpies here. I only have 4 colors. The nice thing about Oracle is each intermediary level is color-coded so that you can delineate all the way up. So for my illustration, we got 4 colors. We'll make it work. So now you've got a stock that, let's say, and let's use this line as the 9:30 market open. So that's the 9:30 market open. Think of this area as pre. So now you've got a stock that's gapped up big, and what you will see, whether you do it manually or you use Oracle's help, is a lot of these stocks will gap up and get stuck in the zones, which is exactly what we want. So what we're looking for is this stock to just kind of bang around between these levels. Now these levels are scaled and they're based on, there's a lot of, I won't get into all of the math, a lot of Fibonacci's, a lot of math that goes into on top of just basic technical support and resistance, but we'll save that for another video. But what you will see over and over again is this type of price action where that big runner gets stuck in a zone. Now it could be this lower level zone, it could be one of these upper level zones, but I'll use the lower level because I'll run out of paper for illustration's sake. It could be this second or this third or the fourth zone, but when it gaps up big, it'll butt into, I call it 1R. Okay, 1R is the first resistance level. Then you've got your 2R, 3R, and then 4R, 5R, 6R, 7R. And then once it blows through that first level, that will tend to become your first support level. That's an S, kind of looks like I wrote 15, but that's one S. And as it runs into one of these resistance levels, the stock will tend to smooth out and it'll start to channel between the first support and the first resistance level, or it could be the second and the third, et cetera, but you get what I'm saying. Now, what's great is you can plan these trades in advance because while it's in that channel, while it can't decide what it's going to do, you just ignore it. And you can be ready, whether you use a limit order or what I like to use on these channel trades is even stop limit orders, or what I like to call a stop trigger order. Now you can check out the channel, you can even Google it. It's a way to just basically have an order sitting, waiting for when a stock hits a key level. Now each of these resistance levels and support levels will have an associated price. Now to make the math easy on me, we'll just say this is $1, $1.50 to $2.53. Now this is a massive oversimplification because they won't be based on those half dollars. Okay, I mean, like, again, hopefully you're bearing with me here and you get what I'm saying. These are going to be based on the chart, the previous time frames. So instead of a whole dollar of like $1.50, it might be at a $1.63, or and this one might be at $2.73 or $2.74. But just for make it easy on me, I'm using whole dollar and half dollars. Like some of you might think it's that simple, it's just every 50 cents. No, it's not that simple, but for the illustration, we'll use that. So now we can start using these to trade the break of that pattern. So let's say initial onrush early in the day, we kind of head into midday. This is my favorite way to trade midday, okay, is using support and resistance as you kind of, move past the initial volatility of the market open, and then the stocks, like a lot of you know, midday they kind of start to settle down and fall into these channels. So no matter what time of day the stock makes a break out of that zone, that gives us an entry, and we can have an order type sitting there waiting for that break of that channel. Now the reason the spike is usually very quick is we have broken all of this, in my instance, quintuple top. Now I just drew 5 humps, but the idea is it tried to break $1.55 times, and when that resistance breaks, not only do you typically get a forceful move, but then that 1R now becomes a support level. So you buy the break of that, and since that's now, when technical resistance breaks, it tends to become support, we can now set our stop, let me switch to red, right below that breakdown. So if this stock breaks out of the channel and then falls back, stop, nice and tight, it failed support, we move on to the next trade. Now, let's assume the trade is working in our favor. What you'll typically see, you get that initial spike, you'll get a little bit of a pullback, but it'll start to bounce off of that lower support. It's now resistance has become support, so you might get close to break even, but it didn't fail, so you stay in the trade. Then you'll kind of get some bounces there, and it'll break the next resistance level and repeat that. So you'll kind of get that spike, it'll bounce, 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 and then it breaks the next level. And all these breaks, since it didn't violate the next lower level, you stay in the trade. Now in this instance, let's say it broke the next resistance level, which becomes support. Well, then you stop out right there. In this example, it's a profitable trade. Small win, nothing great, probably 10 cents a share or something, but you're still profitable because you waited for it to fall back through the next level. Now, what I love, and this happens a lot, is it holds that level, bounces up, bases above that level, which is now support, and then if you're really lucky, breaks that next level, which becomes support, and now you got a big winner, and you're simply moving your stop up with the stock. So this level is no longer your stop. This level is no longer your stop. This level is no longer your stop. Now your stop is way up here. So you've moved through all of the channels and you still have a stop all the way up. Now it's a profitable stop. Like a lot of times when people hear stop, they think stop loss. Okay, this is a stop trading the channels, managing your position to the upside, and only exiting if it falls back through the level it is pierced. Now in my oversimplified chart here, we're in at $1.50. We held through 2, we held through 250, we held through 350, falls back, and then I'll just make up a number. Let's say it's 340. So now by using the trade and using the Oracle support and resistance levels to manage your trade, instead of just selling here when it first spikes, which is what most traders do, and actually drop me a comment. When a stock goes in your favor, and I know what it was like to be a new trader. I was new 20 years ago. The instant I would see green, like the instant my position in my brokerage account was green, I started selling. I was just like, yes, I'm in the green. And I'd close the trade, I'd make 10 bucks, and then it would spike, like over and over again. So how many of you having that happen? Let me know. I get it, I understand, because you have nothing to guide you. Like you're green, you got profits, you're just like, I'm finally have a winning trade, I'm out. But because of that, you always seem to be out too early. Now, hopefully you understand how this keeps you in the trade unless the technical analysis tells you to exit. So now, instead of being out right here for 10 cents a share, we're out up here for, $1.90 a share in this simplified example. So use technical analysis. Please, I'm begging you, if you're struggling with it, check out the daily income trader system because the Oracle algorithm is included. And all of these levels are calculated for you on every single stock at 4 a.m. Now, you don't have to be up at 4. That's the beauty. I'm up at 4 a.m., but you don't have to be up at 4 a.m. because the Oracle algorithm's doing the work for you. So if you show up at 7 or 8 or 9 or freaking 2 p.m. in the afternoon, all of these channels are going to be mapped out for you, and you simply trade the break of the upper channel. Your initial stop is the lower channel, and then you're constantly moving up with the stock, and you only sell if the previous resistance level, which is now support, is broken. And it allows you to stay in these trades so much longer. You're not selling for a $10 profit. Now maybe you're selling for a $1,000 profit, and you're really moving the needle. In summary, as I mentioned, the daily income trader system, I teach all of this every single day. Haven't missed a day in 10 years. The Oracle algorithm is included in the system. So you don't just get mentoring, you don't just get trade alerts, you don't just get a trading platform, which you get all of. You get breaking news, you get level 2, you get everything you need, but you also get the technical analysis done for you so that you don't have to look at charts till your eyes bleed. So check it out, everyone, and thank you for joining me.